Hello, traders. It is Wednesday, the 16th of January, 2019. Thanks for joining me yet again, and again on another Trader Bite. It is 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Um, One of the things that we saw yesterday is an initiative drive on the open. Um, that led us to the key target outlined yesterday. We'll go over that in a bit in the ES. This morning, the sentiment is slightly risk on. Really, it's again we have a mixed bag. The British pound recovered nicely. It's up 22 pips. Gold is still hovering around $1,291. The DAX is up just slightly. The Dow is leading the pack, plus 125. This morning we had the Goldman Sachs report, as well as a Bank of America. Bank of America reported 70 cents versus 63 and beat on revenue as well. Wells Fargo also, Goldman Sachs actually was the one that reported $6.04 versus $5.37 per share estimated. So another beat, 8.08 billion versus 7.9 billion. So earnings are on deck. Really important. We got an economic release at the bottom of the hour, last hour. December import prices in the U.S. came in slightly better than expected. There's a lot looming on the horizon. We are seeing, we're watching closely what's going on with Brexit. Overall, British Prime Minister Theresa May was dealt just a whopping defeat yesterday with a terrible vote against her Brexit plan. There's a no confidence vote being put forth by the opposition party. I believe that's today, and Theresa May is required to provide an alternate plan or steps forward by Monday. So there's a lot going on there. The European Union also has two confidence votes. I believe it's Greece and Italy um, that are slated to come out today. The major European indices rose. Investors are paying more attention to corporate results and M&A news. The Nikkei ended red. The euro slipped a little bit against the dollar, and oil prices are slightly down 46 cents, trading at 51.64 after finishing stronger yesterday. That's pretty much the recap. Looking at what's on deck for today, what's remaining, we have NAHB housing market prices at 10 Eastern, half hour after the open. We have crude oil inventories expecting 1.5 million draw. The previous was a 1.68 million draw. Gasoline stocks expecting a plus 3.167 million. And then we get Fed's beige book, which could be a mover at 12 Eastern or 2 Eastern, and that wraps it up for the day. Let's take a look at our review segment. So yesterday, as you know, I'm not going to regurgitate what I said yesterday about the plan, but the primary scenario, the green line on your screen, the primary scenario was looking for a push higher with a key target of 2607. 2607 is the low of the MC before failure into December. So the first low was defeated at 2587. We have an MC point of control. We've basically taken that 87 and have balanced around it and put in an MC point of control at 85, coincidentally. But yesterday's plan is that we're opening in range on top of the point of control, on top of the MC point of control at 85. So the expectation was for choppy open, a potential for a push down. Why the push down is on your screen here. push down. That was driven by the overnight trade and the overnight low that I'd reviewed and talked about. The expectations were likely to take the overnight low out, but ultimately I'm looking for it to push to 2607 as the key target of the day. That's basically what happened. However, the market was not so generous. Let's look at this on the Renko. It's easier to see. The market just opened and just ripped up. Didn't give us a chance to read the opposing move. Didn't give us a chance to read the down move to formulate a setup to get long into the 2607. So let's look at this right here. What has happened right here? Basically, my entire scenario one was done by 9 o'clock Central. Within a half hour of trading, my entire primary scenario was done, which in that case, and I saw some questions about this on Twitter, uh, when that happens, essentially, I look at what the next rotations do and then come up with more scenarios for the session given the information we just got. Once a scenario is complete, I then look at what is the potential next scenario and the potential next scenario and so on and so on and so on. Okay, so it's the same process you're seeing here, except I just keep repeating it, and it takes 2 minutes to see what's going on and come up with the next scenario, the next likely scenario. But here's here's the open. The expectation again was to open up against the point of control. The point of control is this maroon line right here. The point of control stands for the most traded or most accepted price by volume. And the expectation is we would chop around and then dip down and then get an impulse. But what we did instead is we got the impulse really quick. So we chopped for just a tiny bit for about 5 minutes. And then we kept putting in higher lows, higher highs. We kept skipping on top of the early mid, early VWAP. And then we got this impulsive move right here, which walked us away from a reasonable risk reward scenario. We pulled back to 91, 93, 91 to 95 was became key support quite early, and then we continued to walk through, and then we ultimately got to 2607 on the dot. So you can see the 2607 gets hit, we pull back, this is expected, we pull back, we chop around, and then Senator Chuck Grassley, not one of my favorite politicians in the world, came out and talked about the China trade talks, and that he had had a conversation with the U.S. trade representative, that there was no progress on that front, and then the market didn't take that too lightly and ended up slamming the bids, pulling the market back to basically right at the mid, right on top of the mid, and this was an SOC that was right here. So this was a market. This was basically a news-driven push down. We pulled back about halfway from the top and then consolidated before we started to squeeze lower. Again, 91 and 95 key support here, and we ended up chopping around in here for quite some time before we started to drift up again. So my primary scenario was done right here. Very timely, that news, and then immediately we got the drop on the trade comments, and then going forward, the market just dropped around and started to walk itself back up to that high. You can see it walking, 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 walking. Very choppy trade through most of the late morning, and we finally push to the 2613.50, and then later we push to 2613.75 to finish up the day. So overall, the primary idea was in play. The scenario one idea was in play. The market wasn't very forgiving, though, or wasn't very giving yesterday in terms of hopping onto it before that that impulsive move took place. So we ended up with a normal variation profile with a high of 2613. By the way, the 2614 is a composite low volume node, a pretty a pretty key area up here from a volume profile perspective. And then it just pulled back through the mid and then held sideways. We left the century figure below us, and then the overnight session came in and opened back up and pushed higher, pushed a little bit higher, and just went sideways through the Asian session. The Europeans come in right here, and the Europeans sell off a little bit, and here we are coming right back. The volume today is in the extended session is the lowest we've seen in probably a month and a half. Uh, in about a month and a half, the volume is really drying up. The profile is very Gaussian with a weird protrusion there, but the profile looks like your classic statistics based Gaussian distribution or normal distribution with the point of control shifting between this figure right here, the 2608, and back up to 2612. The value high is right in line with yesterday's high, and we are pushing, squeezing up. The overnight session was completely balanced on low volume, and you could see that the delta is slightly positive, but most of the session it was fairly flat. Uh, just not a very nondescript overnight session. What's important to take away from the overnight session is it did not attempt to attack the 2600 century figure below. It didn't bother, and it squeezed the high, but it didn't go very far before it fell back into the range and spent most of the session back in the range on a like I said, on a balanced profile. So we are not giving up. The overnight session has not given up any territory that the buyers were able to gain yesterday. That's important to note because it tells us that it's likely to continue to resolve upwards as the day progresses. Here's where we are in the big picture: 29.4875 or 29.50.50 in the current contract is the all-time high, and we have pulled back to 23.40.50. So that's how far we've come from the high, and we are essentially pushing back into the MC like I talked about yesterday. Once we push back in an MC, what's the expectation? What's the normal market behavior? The normal market behavior is we are likely to work our way to the point of control. Once we get into an MC, it's likely to push through and test the important prices, the important acceptance prices on its way up. So there's an MC right here, and then there's the big MC that is at that 27.35 and a quarter. That's the extended swing target to the upside. If we continue to squeeze higher today and squeeze higher and higher, we're likely to see a lot of shorts pushed out get pushed out as the trade progresses. Where are we in terms of pullbacks? The 50%, 26.45.50. The key figures above are 26.31, 26.45.50, 26.50, and then we have an MC right in here, 26.66. Beyond there, we're looking at 2700 and then 27.35 and a quarter. Okay, so I talked last Thursday or Wednesday, that I expected 2607 to be taken in the next 2 days, and it just didn't do it. It squeezed and it squeezed and it squeezed, and it ended up balancing, and we weren't able to do it until yesterday after balancing for a few days. We do have, it doesn't seem like it, but buyers are getting paid for their efforts so far. We continue to squeeze higher despite all these dead cat bounce, bear this, and all that. If you go back in time and see what we've done on these big pullbacks, these all seem like dead cat bounces or a bear rally. Watch the bear rally. It's going to squeeze the shorts before it drops off. And Yeah, it may do that. The market may do a lot of things, but it's really important for us traders to stay objective with the fact that we have pushed into the microcomposite, the balance zone from October through mid-December, and that's a really big piece of input there to pay attention to. Okay, so with that being said, let's move on to what we expect today. Today we are opening of the just outside of yesterday's range, okay? And our primary scenario after this big strong move up yesterday, um, you know, once the initial move was done, our range was essentially 92 to 26.13, just 20 points again. We've been hitting about 20 points fairly consistently lately. This morning, we are squeezing up against the overnight high. My expectation is for an open auction out of range. I'm looking for the market to continue to push higher. I'm looking for it to run into some resistance and squeeze back into the range. I'm looking for it to come back towards 2607, balance out in here, and then work its way back to 2600 as the primary scenario. So I'm not as bullish as I was yesterday on my primary bias, simply because we generally don't tend to break through the century figure or key figures and not retest on the other side. Also, the trade yesterday seemed a little extended technically, so I'm looking for this to revert back, and the reason the market generally reverts back is because it in order to continue higher, it tests for buyers. It advertises lower prices and pulls in more buyers who are potentially on the sidelines, pulls them into the trade, and then starts to drift back towards the bull side if that's where we wish to continue. There's a fair amount of resistance up here at 26.30 or so. And that would be the next key target, and that would be the scenario 2 target. Open auction out of range, pull back down to the point of control, consolidate, find a base, impulse up, get back out of range, and then start walking its way back into 26, the 2635 area right back here, or 2631 area right back here. So that's the secondary scenario there. That's well within range, the daily range that we've had, and that's my expectation. We are in an MC, so there's a fair amount of resistance, historical resistance from the microcomposite in this zone here. So I expect it to chop its way up as opposed to gap and run or anything like that. Okay. Those are the two key scenarios. One last thing, the video from last week, my interview with Futures.io was released. The link is on Twitter. It's also on the TraderByte page that you may be on. This session is not a technical session. I basically, for the first time, sit down and recite my entire experience or journey as a trader to where I am today. It's been demanded several times that I do that, and then Futures.io approached me and asked me to sit down with them and get that done. That's what that video is. That's all I have for you. Good luck today, and I'll catch you tomorrow. Take care.